Good day, my brothers and sisters. You are now rocking with the best. Malik D, your credit guru, the hit maker. Can I get a hit? The score.
Good day, good day, good day, good day, good day. Yours truly, Malik D, your credit guru, the hit maker, the score. Checking in with you today with this podcast session. Make sure you like, you subscribe, and you hit the bell notification on my YouTube channel. Hit the bell notification for all upcoming podcast sessions and conversations. To my Instagram followers and to my Instagram viewers, make sure you hit the like, the subscribe, and the bell notification on the YouTube channel. Malik Davis, the credit guru, the score. Today, I have my personal accountant from many, many years back to help me along with my taxes and to give me all the proper information that I need to any tax-related issues or questions or situations that many of us encounter. Today, I got Mr. Dan Green, my personal tax accountant and financial advisor, chiming in today on this podcast session. Mr. Dan Green, how you doing, my brother?
I'm doing great.
Pleasure to have you here. Pleasure to have you here. Pleasure, pleasure, pleasure. I want today to chime in and to interact with my podcast listeners and my viewers and my Instagram followers and my Instagram viewers today about corporations. What's the difference between many different corporations that I set up out here, and what are some of the tax incentives that you receive from having these corporations set up properly, and how they operate and what it is that they do. So if you can chime in today with my podcast listeners and my viewers and my Instagram followers, that'd be a pleasure. And
I'll be happy to.
And like I said, I'm glad that you're here on this podcast, my brother.
Likewise, I'm glad I'm here. Definitely. Well, in talking about different corporations, I would say we would change the term and talk about different types of taxable entities.
Okay.
And you have various types. Now, the LLC is very popular today.
Okay.
A lot of small businesses start out as sole proprietors and they evolve into what you call LLC.
What is a sole proprietor?
A sole proprietor is like you have a store downtown, and the gentleman starts, a lady has a small store, and now we're talking strictly from a tax standpoint, not from the other standpoint. But starting out from a tax standpoint, it's like a sole proprietor, meaning when you file your tax returns, you prepare the normal Schedule 1040, but you have what they call a Schedule C. And with the Schedule C, meaning that the business entity is owned by one individual, one person, and they are taxed at the individual level. Okay. And if you have a profit from a business, from your sole proprietorship, I should say, then they have to pay income taxes on that, and they pay what they call self-employment tax, which is the employer and the employee's portion of the Social Security tax and the Medicare tax. So they have to pay the taxes on the profit and the taxes on the profits again in the form of the self-employment tax. So it's like double tax.
It's double tax. Like you say, it's like a double tax.
Yeah.
So is that beneficial as an individual being a sole proprietor?
In most cases, no.
Okay, good.
As a matter of fact, I would never advise
you guys listen to this guy right here. This guy's been in the business for a long, long time, and he knows all the inside secrets, he knows it. So listen to Mr. Dan Green. I brought him here today just for you guys.
Typically, because the lack of knowledge, people, when they will go down to the Office of Registered Deeds and form their, get a assumed name certificate, and then they'll become and get the normal proper local license to start a business.
Right.
And so and then they get a tax ID. And if you don't do it properly, well, a lot of people use their Social Security numbers when they start their small businesses. So by doing that, you are a sole proprietor.
Okay.
Now, when you go up a level and form an LLC, which is in vogue, which is very popular.
What is an LLC? What's the definition?
A limited liability company, and that's where you register your business with the Secretary of State within your state, or it could be a foreign LLC, meaning you form it outside of your state in another state, but you operate in your state of which the company's based.
Okay.
Now, LLCs. Now, we're talking strictly from an IRS standpoint, a taxing standpoint, are typically taxed as a sole proprietorship.
Okay.
So you have from a tax standpoint, there's no benefit from being a sole proprietor or LLC from an IRS standpoint, unless you do a couple of additional steps when you form the LLC and you acquire the tax ID number from the IRS. Mm-hmm. You have to set up, you have to file up some forms, 2553 and 80, and there's additional form 8911. And with those forms, you can request to be taxed as a separate legal entity, like an association or corporation. Now, by doing that, you're taxed at the corporate level. You avoid that self-employment tax. You just pay the income taxes on the business. And you don't have to, and you file a separate tax return on 1120. But if you do not take those additional steps,
right,
then when you get your tax ID and you register an LLC with the IRS, it defaults automatically to a sole proprietorship or a single member LLC, which is the same thing as a sole proprietorship.
Okay.
If it's 2 or 3 individuals as part of the LLC, then the IRS recognizes them as a multi-member LLC, but they're taxed as a partnership.
Wow.
Now, being taxed as a partnership has the same tax ramifications as a sole proprietorship in terms of the self-employment tax. You still have to pay that self-employment tax, which is technically 15.3% of your income, of your profit.
And is that considered a lot?
Yes. When you have to pay when you got to pay you have to pay income taxes on that profit, and then you turn right around and have to pay self-employment tax, because by being a self-employed, you have to pay the employers and the employees portion of the FICA tax and the Medicare tax. Wow. So if you are an employee,
so you ain't really making no money.
Well, you could, but you're going to be hit hard with taxes.
Exactly.
When you are a normal W-2 employee, you just pay 7.65%.
As a regular W-2 employee.
The employer pays half of it and you pay half of it. But when you're self-employed, you pay all of it.
Got you. So
that's the problem, an inherent problem when you're a sole proprietor or LLC. And when people set up LLCs, they need to be cognizant of the fact that from a tax standpoint, they better have themselves recognized as a corporation.
Got you.
Now, there are different types of corporations in terms for tax purposes. We're strictly talking about tax purposes. Now, you have what you call an S-Corp.
That's what I like, for tax purposes.
Right. You have an S-Corporation and a C Corporation.
Okay.
A C Corporation is a true standalone entity. It's like Microsoft, Bill's Auto Services Incorporated for tax. A C Corporation. Let's say the company has gross revenue of $500,000. They have expenses of $300,000. So they have a net profit of $200,000. Well, they're taxed on that $200,000. Okay, at the corporate level. And it has no impact on the CEO of the corporation, which is a sole shareholder.
Yeah.
It has no impact on his personal tax return.
So on that $200,000 that you just gave an example of the profit, how much is taxed? What percentage of that is taxed?
Well, I'll get into that.
Okay.
Because on the new tax law of 2017, there are advantages of being a standalone C corporation relative to an S corporation. Now, an S corporation was very popular in the 80s after the new when they passed the Reagan tax law. That's when it was formed.
Really?
Yes. It was very popular.
You guys hear that?
Because
you guys better pay close attention now. Listen to this, brother.
Because at that time, the maximum personal corporate rate was higher than, was lower than the maximum corporate tax rate for a while in the 80s. So the S corporation was very popular. But an S corporation, you have to file a separate tax return. It's a Form 1120-S.
And what is 1120-S?
That is the corporate tax return for an S corporation.
Okay.
Okay. So let's just say use those same numbers.
Right.
Let's say you had gross revenue for the S corporation of $500,000
and $200,000,
and you have expenses of $300,000, and you had net profit of $200,000. Well, now while you do you do prepare a separate tax return, it's strictly an informational return that goes to the IRS. You pay no taxes at the corporate level with an S corporation.
Really?
A C corporation you do, like I said before, but the profits from that business flow back through to the. However, say if there's two shareholders, let's just say one shareholder, because we're comparing it to a single member LLC.
Right.
So let's just say that's my company. So I would have to pay personal income taxes on that $200,000 profit. And if there's a K-1 is issued off of the S corporation, which has all my information on there.
What is a K-1?
That's that's a return. That's part of the 1120-S return that has each shareholder's portion of the profit or loss. So in my case, if it's one person, one shareholder, so that $200,000 profit will be on my K-1. I take that K-1 and report it on my personal tax return, my 1040, on my Schedule E. So I'm paying taxes on that $200,000, but I avoid the self-employment tax. I'm only paying income taxes
with an S Corp.
With an S Corp.
Only
Only paying personal income taxes. Now, where if it were a single member LLC with the designation of being taxed as an S Corp, then I would have to pay that 15% self-employment tax on top of that. So by being an S Corp, I avoid that. And you get to take in more of your income. You show the income on your personal return. That's beneficial. Say if you're trying to borrow money or whatever, you're showing that on your personal tax return.
Wow.
So that $200,000 profit will be on your personal tax return and it'll be part of your taxable income and everything, or your adjusted gross income before other deductions and exemptions. So that's the benefit of being an S corporation. A C corporation, you don't have that none of that tax. None of that profit flows through to your personal tax return. The corporation pays the taxes. Okay, so it's totally separate.
So what's your recommendation between a C Corp and an S Corp from a financial advisor and a financial guy that deals with these taxes? Like I said, I didn't see you at your best.
Okay.
Break that down to me. What are some of the benefits from an S Corp and a C Corp?
Well, now
tax talk.
It's fairly obvious because with the new tax law that took effect in January of 2018.
Oh, that was just last year.
Right. Now, the maximum corporate rate is 21%. If you have $1 billion profit, or if you have $200,000 profit, the maximum corporate rate is 21%. Now, let's just say if you're an S Corp. If you're an S Corp and your profits flow through to the single shareholder's personal tax return, the maximum personal rate is 37%.
Wow, that's a lot.
So it makes a lot more sense
to
be set up as a C Corp.
Exactly.
Matter of fact, I've converted a bunch of my
C Corp or S Corp?
No, a C Corp.
Wow.
Because the maximum corporate rate, standalone corporate rate, is 21%.
Now with my taxes,
and what's happened with that? A lot of major companies like Apple.
Yeah.
They just repatriated, meaning they just brought money back to the United States in the tens of billions of dollars that was overseas in other countries. And a lot of companies now have brought literally money back to the United States because of the tax law, the new tax law.
Really?
Yeah, because now they're being taxed at 21%. You make $100 billion profit, which no companies do that. Let's say you make a $30 or $40 billion in profits. The maximum corporate rate is 21%.
So you're not getting taxed up. You're
not getting killed.
Yeah, you're not getting hit. You're not getting raped as far as all your revenue coming in as far as
so a lot of big
income.
Companies are moving that money back, but for small companies, it's a bonanza too. And so I've converted several of my clients from S-Corps back to C's.
You even did me like that.
Exactly.
I mean,
because it makes
I got 5 corporations.
And it makes a lot of sense to do that now. And but the one caveat to that is that you need to, when you are set up as a corporation, whether it's an S-Corp, a C Corp or even an S, you need to start paying yourself a salary. You need to start paying yourself W-2 wages so you won't get hit with an accumulated earnings tax. Because let's just say you have a profitable business, if it's an S Corp or a C Corp, and you never pay yourself a salary, and the money is staying in the corporation where you might be pulling money out through dividends or distributions or whatever.
Right.
And you're not being taxed on that because you're not doing it properly. The IRS will slap you with an accumulated earnings tax.
Now what if you pay the taxes for the income that you received in for the C Corp or the S Corp, and you pay your taxes on it, even though you're not paying yourself anything?
No, you need to eventually you need to pay yourself a salary, because if you don't, you're going to pay the taxes on that money for the corporate level. But they know, the IRS can intimate the fact that they know that you're pulling money out of that company for personal. It's just only common sense. Then they will hit the corporation with what they call an accumulated earnings tax.
So they hit you for another tax on top of the tax
until you've already paid. So what you need to do is pay yourself a reasonable salary. If you have a C Corp or even an S Corp, so that the self-employment tax will come out of those W-2 wages, basically. Right. So if you pay yourself $100,000 out of let's take that $500,000 gross revenue, with $300,000 in other expenses, and then you pay yourself another $100,000. You pay yourself, the single member or the single shareholder, $100,000 salary. Well, that 15% will come out of that.
Out of the $100,000.
Yeah, and plus the $100,000 in expense to the corporation.
Wow.
So then the corporation only has $100,000 in net profit.
Wow.
But that takes care of the IRS, the state, and local income taxes, because a few cities actually charge you have to pay local income taxes, like in New York City.
Wow.
Yeah.
Why
LA,
is that?
Because they've made promises that they can't keep, and they're having to pay huge pensions to city employees, so they tax people at the local level too. If you live in New York City, you pay local income taxes. You pay usurious property taxes.
What's usurious?
High.
You said unusual.
No, usurious, meaning high.
Wow.
High property taxes. If you live in New York State, you're paying local income taxes. You're paying high property taxes. You're paying state income taxes, and you're paying federal income taxes.
They taxing you on all levels, huh, man?
Yeah,
so
and
you can't even eat. You basically
That's
a slave.
why a lot of business people are leaving. A lot of middle class people are leaving New York.
And they're coming further down south.
They're moving south.
Let me ask you this question. I know you're breaking down the difference between an S Corp and a C Corp. What are some of the things that you have seen with individuals that has tax problems, meaning the taxes hadn't been filed in like 7 years, 6 years, 10 years? What is some of the things you have seen and some of the some of the remedies that you have? That you put into effect to help these individuals? Because I'm pretty sure if they 7 to 8 to 10 years behind without filing taxes, as a strong financial guy and a strong tax guy, that remedies for that. Give me some examples.
There are various remedies. One of the things is that first of all, you should never you should never get like that.
Things happen,
but it happens.
Yeah.
Life happens. Life happens, as we know, and the first advice is to not ignore the IRS once you get behind like that, because what they can freeze your accounts. They can seize certain assets if you have a huge balance, and they get into your life. And when you get letters and stuff, and they're about telling you they're about to do that,
right? They
can if you have assets,
right? So
what you can do, one of the best remedies is to, first of all, you establish communication with them.
Right.
And tell them you're
going to make contact with them.
Yeah, make contact with them after.
Don't ignore them.
Exactly. After you've gone years.
You hear that, guys? Do not ignore them.
And you've built up a huge balance or liability with them. Set up some dialogue. Hire a good accountant or whatever, a tax advisor. Exactly. And then there's some remedies like an offer in compromise.
Okay.
They've come up with some legislation recently to make the IRS more forgiving,
Okay.
and more agreeable to work with you. And so you engage yourself with a great tax professional, someone who's knowledgeable. And I've worked with people where I had one client who, by the time the offer in compromise was accepted, he had owed over $1 million, and we got it down to $32,000, and they accepted it, and they were able to pay that out over a year.
So let me get this straight. He owed the IRS $1 million after you got
when I was first engaged, it was up to $800,000, and with the penalties and interest that accrued, because it took a year and a half to get it resolved, but we got it down, and they finally accepted $32,000.
And how many years was he behind? I mean, what was he behind?
He was by the time 12 years.
And you got it all the way down to where he had to pay the IRS $32,000 from,
and this was
from
back
$800, and then you had the interest and all that made it $1 million.
Yeah.
So
we did that through an offer in compromise.
Wow.
We did, and we got it down.
Wow. How long was the process?
It took about 18 months.
But you saved them a lot of money.
Yeah, and during that process, when you're doing the offer and compromise process, they don't go after you. They don't freeze your accounts.
Because you're in some type of agreement with it. You negotiations.
Exactly. Now, when you do an offer and compromise, what you have to do though is get all your taxes current in terms of all your filings and stuff. You can be behind, but make sure you're current with filing all your taxes. You have to get up to speed with that. So you need to get your accountant and get all your taxes filed. Then you do the offer and compromise.
Gotcha, because now it's on the books. It's on the records now.
Exactly. Now, there was another situation where I had a client who had not filed for 12 years. It was 2014 when I took on this case.
Wow.
He had not filed since 1998. And see, what happened was this guy owned a bunch of real estate.
Mm-hmm.
And he also engaged heavily in the stock market. So a lot of people don't realize when you engage in stock transactions,
mm-hmm.
they issue a 1099 at the end of the year. That's your brokerage firm. That's filed with the IRS. You get a copy, the IRS gets a copy.
Mm-hmm.
So he had a lot of stock transactions over the years, and then he also bought real estate, flipped real estate, rented properties. So when you sell a piece of real estate, the attorney is supposed to issue at the end of the year
a 1099.
A 1099-S.
S.
Yes, it's called 1099-S, and all it shows on it is the gross proceeds of the sale. Okay, so they had him on. By the time I got the thing, it was about $600,000. And so we went back, filed all his taxes, and I had to go back to 1998. Now think about this: I didn't even have software
to go
that
back
would
to
go back to
1998
that was compatible with my computer. I had to do 5 of his tax returns manually, which actually ended up being a benefit to him.
How so?
Because the IRS, while they had records of his liability, the underlying records are wiped out after 10 years.
Really?
As far as what the original causes of his liability mean.
Right.
I'm putting it in layman's terms.
Right.
All the records and stuff that they had, those are purged from the system. So we had to go back and reconstruct all those stock transactions, because that's what most of the liabilities were from, not anything else. He had no wages or anything like that. It was all stock transactions and stuff. So we were able to go back and recreate his transactions to his benefit, showing losses. So we wiped out all the liability. As a matter of fact, we wiped all of his liabilities out, and he ended up owing $2,400. That was it, from $600,000.
Wow! And what was how long was the process with that?
Well, and I was dealing directly with I did a what you call power of attorney.
Okay, so
and then I was dealing directly with the IRS guy, and he in Greensboro, North Carolina. So we were on constant contact, and I was sending his returns in, and he was signing off on them, and he wanted to get it done.
Right.
And then with all of his information, it took This is because he had stuff. He would get letters from the IRS and throw them in boxes.
So he would ignore them. He wouldn't
totally
establish no
ignored
line
them.
of communication with them.
So we had to go and get all that information and find it. And he had stuff stored up in his attic and all that stuff.
Really?
Oh yeah, it was. I had to hire a young lady to go and find his stuff, and it was a long. It took about a month. It took 2 months just to get his stuff together and do his returns. But once we got everything done and prepared all his tax returns, we got him down to $2,400.
$2,400.
Yeah.
From how much?
Around $600,000.
Now you tell me this is not a bad tax preparer, a bad financial guy over here, Mr. Dan Green with Green.
And that was not that was
That's my man.
was just doing his taxes, just getting his tax returns done and stuff. And we, like I said, and as a matter of fact, like from 94 to 2000, 95 to 2004, all that stuff was just completely wiped out. And they just said, they signed off on it. They just got the returns in.
Wow.
So he owed nothing. Actually, he was due a couple of small refunds for some taxes they had taken out on some stock transactions and stuff. But another thing you need to keep in mind is if after 3 years you go back and file returns, and if the IRS owes you the money, you can't collect on refunds past 3 years back.
Because the interest and everything involved. I mean,
No, it's just that they owe you money, but that's the statute of limitations. You can't. A lot
36
of people
months.
3 years back from it filing. So, like, if you go back to 2015 now, you can't get. Say if the IRS owes you $25,000, just out of luck. That's the penalty of not filing.
They some gangsters.
Because I had another client.
They some gangsters, right, Dan?
Yeah. Well, I won't say that, but
they are gangsters.
You just need to keep up with the rules, and most people don't. I had another client who I went back and did 10 years of taxes for her. And every year, with the exception of maybe one, the IRS ended up owing her money. Now, what the IRS did, they went back and redid her taxes because there was enough stuff filed every year. After a while, they will reconstruct your taxes for you.
Really?
And they do it always to their advantage. And they will have you owing money. And with her, they had her owing money every year. I went back and did it correctly.
Amendment.
I went back and did her returns.
Right.
Technically, I guess you can call it
It's an amendment.
Yeah. And went back and did it, and the IRS owed her money every year.
Not like I'm the tax guy, but I know,
Well, then IRS, for all those years, with the exception of maybe 2 years, that she actually owed money. And we were able to wipe that out and use a credit. We had a credit for the last 3 years. Mm-hmm. But all those other years, I think the IRS owed her like $75,000, and she lost out on it.
She didn't get a dime.
She not collected one penny. Because it was past the statute.
But she did get the relief by dealing with you to help her.
Yeah, she didn't owe any money. She didn't owe a penny. She didn't owe a penny. We just got to get it all filed, and then she ended up getting a small refund for the last year, because we had to net what was owed for the year prior to that.
Let me ask you a question, and I'm glad you're touching up on this, and I'm glad my podcast viewers and listeners are taking this in, because I bring on. Like I said, this podcast is for financial purposes and entertainment purposes. So when I bring on a financial guru in regards to dealing with taxes and other things that he deal with financial-wise, you guys need to take heed, because I'm sharing information with you so we can make sure that we can break the chains from any kind of issues that you might be having financial-wise, credit-wise. And by the way, if you need to utilize my services, go to my website, www.malikdavis.com. New Affordable Credit Cleanup Service Program if you're looking to have your credit restored. Follow all the instructions there on my website so you can start the process of regaining your financial freedom. If you cannot afford that New Affordable Credit Cleanup Service Program, here's my book, Break the Chains with Credit Tips and Secrets. Inside my book, I have put tips and secrets in this book where you can begin the process of restoring your credit on your own. It works. My tips and secrets from my experiences throughout the years, I put some of them in here. The book is on Amazon. Make sure you type Malik Davis' name in the search bar. And the book is on my website, www.malikdavis.com. Now, if you want the Elite Expedited Credit Cleanup Service Program with my hands and energy on your file, typically with your file being cleaned up within 90 days or less, then DM me, Malik Davis 211 on my Instagram page, your name and your contact number. But before you DM me for the Elite Expedited Credit Cleanup Service Program, know and understand that my fees consist of $3,500 and up. There's no payment plans with that. If you want my hands and energy on your file, and you want that credit hit produced within an expeditious time frame, Elite Expedited Credit Cleanup Service Program. With my hands and energy on it, $3,500 and up. DM me your name and your contact number. And like I said, the book is available on Amazon and my website, www.malikdavis.com. And if you're looking to have your credit restored, if you cannot afford the Elite Expedited Credit Cleanup Service Program, go to my website, New Affordable Credit Cleanup Service Program, www.malikdavis.com, and follow all the instructions to begin the process of regaining your financial freedom and having your credit restored. Now, back to you, Mr. Dan Green. I got a question for you.
Okay.
How does the tax laws affect this election in regards to what's going on with all this impeachment and with all this
The political
shit show? You know what I mean?
It's
a shit show.
The election. Well, I'll just put it. I said
it. It's a shit show.
Just,
reality TV at its best.
I'll just discuss the election, but the potential candidates, and what we currently have.
Okay.
And how that could affect our pocketbooks, 2020 and beyond.
Wow.
Because November of, I think it's the 3rd or 4th, whatever the first Tuesday is in November 2020. That's a very important date because that's going to affect your pocketbook. Believe me. And
how so?
Well, granted. Depending on who is elected president and their policies and the makeup of Congress and the Senate could have a major impact on a business person or anyone. A lot of people have tuned out Washington because of the rancor and the fighting back and forth between Congress and the president, and it's getting to be really insane from that standpoint.
Right.
But people need to stay tuned to that because whoever wins the election, they're going to be in office for 4 years. Either Trump's going to be for 4 more years, or you're going to have somebody on the Democrat side for 4 years at least. So when me being an accountant, I'm a numbers guy. I look at the numbers. It's black and white to me. Elections tend to become emotional things. People tend to people vote with their pocketbook, but that's still an emotional thing because
want dealing with their money.
Yeah, you're dealing with your money, your livelihood, your business,
yes,
and those things. And you have a known quantity in Trump.
What's the known quantity in Trump?
Meaning you know what he's already done in terms of tax legislation.
What has he done?
He first of all, he lowered tax rates. He lowered the corporate tax rate from 35%.
Is that a fact?
Yes. He
Okay.
lowered it.
So he's speaking facts. He's not just speaking based off of his emotions. Like he said, he's a numbers guy. He's speaking facts as an accountant.
The maximum corporate rate, and this is from Joe down.
So don't personalize it.
Yeah, from Bill Johnson's Incorporated to Microsoft.
Okay.
The maximum corporate rate is 21%, like I said before.
True.
That's had a massive impact on the economy. If you look now, you can't turn around. You go anywhere, you see job openings. We've got 7.25 million job openings now in this country. That's the most we've ever had in history in terms of jobs that are available out there.
Right. So it is work.
Right. And as a matter of fact, you got net job openings in terms of where people are looking for jobs and job openings, and net job openings over a million. Over a million. The economy
So it sounds like to me individuals is lazy out here then, right? Talking about
if you want a job now, you can get. As a matter of fact, there's certain segments, segments of the economy where people are being laid off and they already have 2 job openings, already have 2 jobs. Opportunities waiting for them. They get a severance check, and then they already
off
the next
to
Monday
job.
they start another job.
Yeah,
it's insane. The economic opportunities now for blacks. This is the lowest black unemployment rate in the history since on in public. I mean in modern times. You got
really
5% unemployment in blacks. In the black economy.
So when Obama was the president, when he was in office running the president, when he was running, hey,
black unemployment rate was in double digits.
Wow.
It was never under double digits. Go back and look. Now it's 5%.
And that's a fact.
Yeah. It has nothing to do with race or whatever. It's the fact that
you're a numbers guy.
When the economy is expanding, everybody benefits. John F. Kennedy, a Democrat, said in 1962, "A rising tide lifts all boats." And so, if the economy is booming, it's what I call it doesn't see race. When the economy is doing really well, everybody benefits.
Everybody benefits.
Even as a matter of fact, the people at the low end of the wage scale are actually having the highest rates of increase in wages. It's incredible. It really is. I mean, I wasn't a Trump guy when he was running for office or whatever, but the proof's in the pudding.
And what has
the economy is really? He's cut regulations which have allowed businesses to expand and not have to deal with red tape in the federal government and all that kind of stuff. It's really, really remarkable. And what he's done in the 2.5 years, 3 years he's been in office, he's gotten so much accomplished. I was really very skeptical at the beginning, but he's walking the walk. He's just not talking the talk, he's walking the walk. And if you are being a realist, and if you're being impartial and just looking at the numbers, you can't argue with it. I mean, it's incredible. He may not. His personality is one that. He is who he is. Yeah, man. He's a New York guy.
I mean,
real estate guy,
and he's blatantly letting you know this is who I am, and I'm not changing.
Exactly.
I mean, you take me for who I am.
Yeah.
It doesn't mean I don't get the job done.
No, he's getting the job done from that standpoint. Now, if you look at on the Democrat side, you have. Some people that are appealing to the fringe left. You have people like Elizabeth Warren who wants to tax the rich, and with that Medicare for All program that she's talking about, which is saying health care is a right, it's a constitutional right, which is not. But people should be allowed. They should have access to health care. Mm-hmm. You know, everybody in some form. But what they you have Bernie Sanders and Elizabeth Warren, and their policies of bordering on socialism, and raising taxes. You can't raise tax. There's not enough wealth. There's not enough wealthy rich people, and you say you tax their income. See what they're going to ultimately have to do. She wants to hit them with what they call a wealth tax, and that's a tax on what they're worth. Not the income that's generated from them every year. If you institute some in their climate change, which the existence of climate change is something that is debatable anyway, as far as man's impact on the climate and stuff, that's highly debatable. In terms of what man can't control the weather. Anybody that thinks that is way out there. It's not. We might have some minor impact on the weather. Yeah. But what the policies and stuff with these taxes, these carbon taxes, and what these policies will have the impact on the economy is insane. And unless you make China stand and fall in line, in India, these countries that are going through their economic renaissance right now, those are the major polluters and stuff. They're not. And if you go there and tell them to try to change what they're doing as far as their factories and all that kind of stuff, they'll tell you to take a hike. Wow. And until they address that issue, this climate change crap and these carbon taxes and all that kind of stuff, it's fantasy land. But getting back to what some of their policies are, Well, it would benefit me because they're going to raise taxes like crazy. And there's going to be new tax laws and all that kind of stuff. Oh, it's going to make me rich.
As a tax accountant.
Yeah, because people are going to have small business people and individuals.
They're going to feel it.
Decipher this stuff. They're going to need a tax accountant and stuff.
If a Democrat becomes
yes, because they want to raise taxes, not just on the wealthy. They tell you it's just going to be the wealthy.
And make no mistake, I'm not a Democrat nor a Republican, but I got common sense enough to know to listen to this guy right here.
There's not enough wealthy people. If you confiscate all the wealth of the richest people in the United States, if you confiscate, take their wealth and put it in the U.S. Treasury, you will operate the federal government for about 9 months. What you going to do then? I'm not talking about their income. I'm talking about if you take what they've got and make them penniless. You can only operate the federal government for about 9 months.
Wow.
Okay? The trillions of dollars that they're worth. The federal government operates now on $4 trillion a year. Roughly a little over $4 trillion a year. They have to borrow about 30% of that. Actually, about a third of that they have to borrow. That's why the national debt is $23 trillion.
From?
They borrow it from, the Social Security Administration. They've been stealing from the Social Security Administration for 50 years. The Chinese have been buying debt, but that's not a lot. People think China owns a lot of our debt. That's not right. And Japan, they don't. It's the Federal Reserve and the Social Security Administration. They're the biggest holders of our debt. Go back and look at that. The Federal Reserve, what they do, they print money.
Right.
Okay? With the Treasury Department issues debts like Treasury bonds and Treasury notes and stuff to study your bonds and stuff to finance the shortfall in the federal government.
Yeah.
Well, the Federal Reserve, which is not a government entity, people think it is. It's what they call a quasi-governmental entity. Mm-hmm. The president appoints the head and the governors, the chairman of the Federal Reserve. But technically, it's supposed to be a private entity. Well, that's who's been financing the shortfall of the federal government. A big chunk of it. They buy those notes and bonds that finances the government. But the federal government has been running deficits for the last 50 years, with the exception of a couple of years. A couple of years during the Clinton administration and 1 year during the Johnson administration. They actually had a surplus, which is still weird to me because they said, Clinton balanced the budget, but the national debt still went up. So if we had a surplus, why would the national debt still go up?
So with Donald Trump as president, as our president, and you just broke down a few things that he have done. What else has he done for the economy, for the American people?
Well, like I said, his two biggest contributions is that he lowered taxes on everybody, not just on major corporations, but everybody across the board. Now, one thing to keep in mind, half the population pays no federal income. Half the taxpayers or half the people that are working pay no federal income taxes. They pay no federal income tax. They might pay FICA tax, but they pay no federal income tax, and they might pay state income taxes.
Right.
So half the people don't pay federal income taxes. That's a thing where a lot of people don't realize that. Mitt Romney said that in 2012, and he got raked over the coals. But he was telling the truth. Half the people in this country, the taxpayers, technically taxpayers, pay no federal income tax.
The state,
they pay state income tax, and they have to pay FICA tax. Everybody's got to pay FICA tax. If you are employed, you're going to pay it. So, but of the people that pay federal income taxes, and the new tax law under Trump and Congress that was passed in 2017. Their taxes got lowered. Corporations' income taxes were lowered substantially. And I see from 35, they had a 40% reduction in taxes.
I see that firsthand myself as a business owner.
Yeah, and that's impact major corporations and small corporations. And what that has done, it has lifted up the economy in the form of growth and job growth, expansion, production, all of that. Companies, like I said, have been repatriating or bringing money back to the United States because it's being taxed lower now in the U.S. than in foreign countries. And before that, companies were sending money overseas. They were engaging.
Left and right.
They were engaged in what was called like a reverse acquisition. or inversion. What they were doing, they were going in and allowing a foreign company to, even though they were the bigger company, allowing themselves to be acquired by a foreign company, so the headquarters would be in the foreign country, where because the tax rates were a lot lower. That was going on during the last two presidents, especially on the last one.
Is that why they were setting up all those Swiss bank accounts across seas to put the money over there?
And the IRS went after them for that. For wealthy individuals primarily that were doing it in Switzerland, places like that. So, and they were getting slapped. They were given a certain length of time to pull that money back and report it to the IRS, or they were getting slammed.
Wow.
So that went on during the previous administration, but I'm giving Trump credit for what he's done for businesses.
Gotcha.
He's very pro-business.
He's a businessman.
And it's benefiting everybody.
He was a real estate guy.
And it's benefiting everybody. But if you go, if we get a Bernie Sanders or Elizabeth Warren or any of these other Democrats, with one exception, probably if Michael Bloomberg is elected, if he is pro-business. He is a former New York mayor. And but he amassed a major fortune, and he did it from the ground up. His Bloomberg media empire is extraordinary, and he's worth about $52 billion, and that's mostly liquid. He can write a check. He can buy.
So he got that paper.
He can buy Donald Trump about 5 or 6 times over.
Really?
Yes. So he's the real deal. Now, some people think he's more of a, because he came up with a nanny tax and all that kind of stuff on drinks and stuff like that. You have to look at the way he ran New York. And now he came on the back of Rudy Giuliani, who was a great mayor. From all indication. So he went in and basically followed his policies and stuff. Some like the stop and frisk and stuff like that. And now he is apologizing for that. But when Rudy was there, the crime rate went down. Way down.
So what do you think about this impeachment thing? I mean, I know you got something to speak on with this impeachment thing.
It's all political.
Okay.
It's all political. There were and you have to look at it. You have to be, and like I said, I was not a Trump guy when he was running for president.
Right.
He has won me over from an economic standpoint.
From a business standpoint.
From a business standpoint, because he's definitely pro-business. And, but it's of all it. There's been 3 other impeachments. Nixon was never impeached. They were holding hearings for but he left before he was about to be impeached, and then he was going to be convicted and removed from the Senate. Removed from office by the Senate.
Right.
So it didn't get there. But of the 3, you had Andrew Johnson, Bill Clinton, and now Donald Trump. Andrew Johnson that one was very weak. That was strictly political. Now, you can say Clinton's was,
he committed a crime.
He lied under oath.
He committed a crime.
So he committed a crime, but it still was a weak impeachment. I mean, they should have. He was already going with the charges and stuff. I mean, but see, his started with an independent prosecutor, so that made it more legitimate. But ultimately, the Republicans paid the price for impeaching him, because he was fairly popular.
Right.
Whereas
a lot of people loved him.
But his had nothing to do with foreign his conduct as president in terms of how he was running the country. It had nothing to do with that. It was the fact that he had been sued by a woman,
right,
who said that he,
she put the press game down.
Yeah, but he lied under oath in a civil trial, so that's why he got impeached.
Gotcha.
Because he committed a crime by perjuring himself.
Gotcha.
So that's what they investigated him for other stuff, but they got him for that.
I did not have sex with that woman.
Exactly. So he lied under oath about some stuff, and that's what got him in trouble. Now, with Trump, first of all, they said he was a Russian asset. He was Putin's butt boy and all that kind of stuff, which was a lie. They investigated him for 2 years. He had no ties, or no one in his campaign had anything to do with the Russians. And then, so...
You know this for a fact?
The Mueller investigation, the Mueller report.
Gotcha.
Exonerated
because we speak facts over here on this podcast right here, and it's uncensored.
The Mueller investigation completely exonerated him as far as his ties with the Russians. They charged him with no crime. There were a couple of people in his campaign that they got for process crimes, but it had nothing to do with the campaign or had nothing to do with the Russians. Okay? He was totally exonerated from that. Then this summer, he speaks to they said, well, we can't get him for Russia, so let's see if we can find something else. So what they did, they had some alleged whistleblower who didn't overhear, but through third-party hearsay, said that he engaged in some kind of quid pro quo or was promising, well, you got to go after Joe Biden with the Russian president. With the Ukrainian president. You need to investigate Joe Biden. If you don't, we're not going to give you the $1 billion in foreign aid, which was disproved later. So they started the investigation that not a third party like Mueller, but the House, the intelligence agency. The intelligence committee.
Yeah.
Adam Schiff. So they started investigating him, saying that he had bribed the Ukrainians and forced them to, saying if you don't start investigating Joe Biden and his son, we're going to withhold aid. Well, that was disproven because Trump released a transcript of his phone conversation that he had back in the summer, and it showed that there was no quid pro quo. But they started the investigation, and then it went from the House Intelligence Committee to the House Judiciary Committee, which put together formal articles of impeachment that they just voted on last week. And so all the House Democrats, not a single Republican, voted in favor of the impeachment. Every House Democrat, with the exception of 2,
I seen that,
voted to impeach. So it's strictly, and Nancy Pelosi originally said that she would not impeach the president unless she had bipartisan support. She had no bipartisan. It's strictly the Democrats, and it's going political. Now it's going to go into the Senate and die.
Because the Republicans run the Senate.
They run the Senate, and they're going to kill it. So
her thing is, but we still impeached him.
Yeah.
He still was
So
impeached.
he will be
the word itself, he still got impeached.
He will be the third sitting president in the history of the United States in 250 years or so years of the United States to be impeached.
He's been impeached from the word impeached and from the action of being impeached. But as far as removing him as president of the United States from that, as far as removing him from the United States Corporation as being the president, that's not going to happen.
Yeah, the 2 articles are the abuse of power and the what was the other one? Obstruction of Congress. So saying that because there were like some people within the administration, some key officers within, like the chief of staff, and I think the former national security advisor, they wanted them to testify, and they would have to go through the judiciary. They would have to sue, and they didn't want to do it. The House would have had to sue the president in order for them to be forced to testify, because he said, "These people are not testifying."
Right.
So that's why they got him for obstruction of Congress.
So would you say this whole impeachment thing is just a shit show?
Yeah, it's a complete sham. The man did not commit a crime. If you don't want to be president in 2020, after vote him out of office, put up a good candidate, and so the people can vote. And beat
him fairly.
But what they're trying to do is damage his brand, because
why are they trying to damage his brand? What is it about these?
They want to damage his brand because the election is going to come down to about 5 or 6 states. And it's going to come down to some independents and some Democrats who voted for him last time, about 60,000 people. That's what it came down to. Hillary Clinton won the popular vote because of New York and California. Okay?
Yeah.
That's why she won the popular vote. But she lost in an electoral landslide because of Michigan, Pennsylvania, Ohio, Wisconsin, and states like that. And about 60,000 votes. These people that normally would have voted for Hillary voted for him. And these are blue dog, what they call blue dog Democrats, Democrats who are blue collar people and typically are union people. and they like Trump. He captured their imagination. Now, he's going to... That's why if you look at his rallies and stuff, they're always in the industrial Midwest. That's where he goes because he knows he's going to win the South.
Exactly. What has he done for for the African Americans?
That's what like I said before. The best thing that he's done for blacks is he's got the economy going where blacks don't. It's got we have the lowest black unemployment rate in the history in modern times. If you're black now,
didn't he just do something recently for the black colleges? The black colleges?
Yes, he did. As a matter of fact, he made it easier, and he met with the heads of all the top black colleges in the United States and made it easier so they won't have to come to D.C. every year to beg for money. He increased the funding. He's provided the biggest funding in the history of the HB, the historically black colleges and universities.
Really?
Yes. And you can pull it up on the internet or whatever, and they thank them for it. Never happened in the Obama or Bush administration, but now he's it's like a huge amount of money, $40 million, something, no, maybe more than that. It's a huge amount of number. Maybe, but the biggest funding in the history of the historically black colleges, he signed the law. It went through Congress. It went through both houses. It was bipartisan. And then he signed it in the law. So I guess he's not such a racist after all.
So what would you say? I agree with you.
A lot of people say he is.
I agree with you. I mean, the man is who the man is. He's showing you who he is. And hey, either you like it or you don't.
And that can be verified.
I mean, come on,
you can
man.
verify all of these. Everything I've said today can be verified.
2020, do you foresee a recession coming?
No. 3 months ago, they were saying that we were going to have a mild recession. And a recession, for people that don't know what a recession is, it's 2 straight quarters where you've had negative growth or less growth. Let's say you had 2% growth in one quarter, in the third quarter, then the fourth quarter, it went from 3% to 2% in the third quarter, and it goes from 2% to 1%. So technically, that's a negative growth. So that's a recession.
How about a mild recession?
I don't foresee a mild recession. I think ultimately, eventually, down the road, we're gonna have we got some major issues we got to deal with, like the growth of the national debt. We're at $23 trillion. Everybody should put this on their phone and on their computer. Go to usdebtclock.org, and put that on their computer, and it shows the national debt, how it grows up. It goes up $100,000 a second. Okay, it's $23 trillion is where we are. That's something we're gonna have to deal with, and we're not dealing with as a country.
Wow.
We spend like drunken sailors. It doesn't matter if you're a Republican or a Democrat. The Republicans spend money on the defense and other things. The Democrats spend money on social programs and crap. It doesn't matter. We're spending. We did it under Bush. We did it under Obama, and we're doing it under Trump. We're spending money like drunken sailors, and our children and grandchildren are gonna have to. We're gonna leave them with a big mess. That's the national debt per U.S. government. Per U.S. citizen is $70 trillion. Per taxpayer, it's It's $70,000 per taxpayer. The national. Let me start over. Per U.S. citizen, the national debt is $70,000. Per taxpayer, it's over $200,000. The national debt.
Wow.
Our children and grandchildren are going to be left with this mess.
Oh my goodness.
We're looking at them. We're going to have when the national debt collapses.
Yeah.
It's going to have a worldwide impact. We will go into a depression. Now, I'm not saying it's going to happen in the next 5 to 10 years. It's going to happen unless we restructure.
Exactly.
See, we never pay off our national debt.
Right.
All we do is refinance it and keep borrowing. That's why it never goes down. People say, well, don't we ever? We never pay the principal on it. We just refinance it and borrow more. We have not paid down the principal of the national debt in my lifetime. We just keep borrowing it.
Well, Brother Dan, I'd like to have you back on my show. Would you please come back on here to my podcast?
Be more than happy.
Listen, Mr. Dan Green Financial guy, tax accountant. Take what this guy has been spitting to you guys to heart. Malik D, your credit guru, the hit maker, the score. We'll be checking back in with you here very shortly. Peace.